Hi, I'm Claire Withers and I'm joined by my colleague Rebekah Leviston. We are both solicitors in the Corporate Tax and Incentives team at Brodie's, and this short tax bite is going to consider some of the LBTT consequences of extensions. This can be a fairly complex topic and we don't intend to cover every scenario. What we do hope to do is give you an understanding of the main points to look out for by asking yourself the right questions. So we're going to consider three potential treatments of a lease extension. The first is the extension of a lease which has already been reported to Revenue Scotland as an LBTT lease. The second is the extension of an SDLT or stamp duty lease. And finally, we will discuss the extension of a lease which is already within the LBTT regime but becomes reportable to Revenue Scotland for the first time. So some of the initial questions you'll need to ask yourself to enable you to determine the correct LBTT treatment. Has an LBTT return already been submitted? When was the lease initially granted? And has the lease already been extended, varied, or assigned since the initial grant of the lease?
So the first of three possible scenarios relevant to a lease extension is where the lease being extended is an LBTT lease. If an LBTT return has already been submitted, then the lease is within the LBTT regime and any extension can be reported in the next further or review return. So when the extension is agreed, no reporting requirement arises until the next 3-year review return or on assignment or early termination of the lease. If on review it is discovered that a return should have been submitted earlier, this filing error will need to be rectified. If the initial LBTT return has been misplaced, this can be requested from Revenue Scotland by sending a signed copy of the client authorisation form through the SETS messaging service, and we have found Revenue Scotland to be very responsive.
So the second scenario relevant to lease extensions is when an SDLT or stamp duty lease is extended. In this scenario, the extended period of the lease is treated as a new lease for LBTT purposes. If this new lease is notifiable, the tenant must submit an LBTT return and the lease will usually then be in the further returns regime. A lease is generally notifiable if it's for a term of 7 years or more, or if the net present value of the rent exceeds the nil rate tax band. So a 10-year extension of an SDLT lease will generally be notifiable. On the other hand, a 5-year extension generally won't be unless the rent for the period of the new lease exceeds the threshold. If the new lease is not notifiable, an LBTT return is not required, but the tenant will need to monitor the LBTT position for future events which might trigger a reporting obligation. So when considering SDLT and stamp duty leases, always check whether there has been a previous extension or variation. If there has, one or more LBTT leases could already have been created, potentially sitting on top of the SDLT or stamp duty lease, which could also still be in existence. This is a complicated area, so requires careful consideration, and we'd recommend taking further tax advice in these situations.
Finally, where a lease has been outside the scope of LBTT, then an extension may result in the lease becoming notifiable for the first time. In this instance, ask yourself two questions. Firstly, is there an LBTT lease? If the lease was granted, extended, varied, or assigned on or after the 1st of April 2015, then chances are this is an LBTT lease, which then leads into question 2. Is the LBTT lease as extended notifiable? Despite the extension, the lease might still fall outside the scope of LBTT. However, if the extension pushes the term of the lease beyond 7 years and the threshold requirements are met, then an LBTT return must be submitted within 30 days of the date the lease becomes notifiable. If the lease remains non-notifiable, we recommend carefully monitoring future events which may trigger a reporting requirement, such as increases to rent, although this is unlikely to be a consideration during the COVID-19 lockdown.
So some other issues to look out for in relation to lease extensions which require further consideration are leases which have tacitly relocated, payment of a premium by the tenant, so premiums could trigger an LBTT liability even if the lease is not an LBTT lease. Leases for which 100% relief is available, such as group relief, leases which involve earlier reporting errors, and leases which are varied or assigned at the same time as the extension.
Now to finish, we have provided some examples of on the following 3 slides to illustrate the scenarios discussed throughout this tax bite. We won't go through these in detail, but please feel free to pause the recording if practical application would be helpful. Example 1 considers the extension of a lease already reported to Revenue Scotland as an LBTT lease. Example 2 considers the extension of an SDLT lease. And example 3 considers the extension of an LBTT lease which becomes notifiable for the first time. So that brings us to the end of our short tax bite on LBTT leases and extensions. Please feel free to contact Claire or myself with any queries, and as always, stay safe.